Welcome, everybody. We're going to get started here momentarily. I'm just going to go fill up my water bottle, and it's going to be a bit of a longer one again. Seems to be the theme these days with these live streams, but we do have Green Thumb earnings that just came out. Spoiler alert, they did beat in terms of revenue. They did miss, though, in terms of their earnings per share, or EPS. And they also have the conference call coming up in about 13 minutes, which I'm all registered for that, so everything should be good to go here in about 12 minutes or so. That should be kicked off, but just sit tight. Just going to go fill my water bottle, and we get things kicked off. All right, welcome back on The Pursuit of Wealth, everybody. It's Rod with the Pow Group. It's Thursday, November 7th. Hope you're doing well. In this video, we're going to be discussing Green Thumb's Q3 2024 earnings. They beat in terms of the revenue, but missed in terms of EPS. So we'll jump into all of that and more. We're also going to do a live stream of the conference call, which starts in about 12 minutes. Just filled up my water bottle. Might be a bit of a longer one. We'll see how long. Usually the earnings calls are about 30 minutes to 45 minutes in length, and it's crazy how much water I drink in the run of the day. I've got like this big liter jug, and I think I probably drink like 4 or 5 of them a day. Man, love water. All right, so we'll jump into it. Overall, not a bad report. Before we get to it, make sure to smash the like. It helps support me in the channel. If you're new, you can subscribe, tick the bell. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is not financial advice. This is for entertainment purposes only. Yada yada yada. Don't buy or sell anything based on anything that I say or write. Full disclosure: I do own Green Thumb. Also, you can follow us over on X, formerly Twitter. Handle for that is @GroupPow. So the earnings came out just after market close today. You can see here 4:02 Eastern, and this was for the period ended September 30th, 2024. And their third quarter 2024 results. Everything mentioned is in US dollars as well, unless otherwise stated. So their revenue was $287 million. We had a forecast of 282.92, so we can round that up to 283. And it did come in a lot higher than last quarter's revenue. It was 280 last quarter actual versus 277. So they had a big beat, and then another big beat this quarter. So it's just been up and to the right. We did dip the quarter before that. Just by a few million, but we're going back the other way, continuing the growth trajectory that we're on here at the moment. But yeah, the conference call should be starting here soon in about 10 minutes. And we'll go through. There was also some news here. Green Thumb expands Florida retail footprint with the opening of a Rise Orlando location on Good Homes Road on November 8th. And this was even after Amendment 3 failed in Florida. Doesn't seem to be phasing them too much. But let me know what you think of these earnings in the live chat or in the comment section if you're joining the video after the live stream. But they had EPS estimates of 0.0645. Even if we take a look over here at Moomoo, you can see here this is based on 11 analysts on the revenue. They were forecasting 282.944, so rounded up to 283. EPS positive 0.061. And that was based on 7 analysts. So then if we take a look over here, same thing, 282.92 million, rounded up to 283 and 0.0645. If we take a look at GTBIF here on TradingView, yeah, 282.914, and then estimate 0.065 came in at 0.04. So we scroll down to the earnings report. It's right here, 0.04 per basic and diluted share. You can scroll down and you'll see it here as well. So pretty big beat in terms of revenue estimates and slight miss on the EPS, but still positive nonetheless. So overall, I think this is a pretty decent report. Third quarter adjusted EBITDA of 89 million or 31% of revenue. Scroll down, 150 million 5-year credit facility, industry leading interest rate, 5%. Retired 225 million senior secured debt due April 30th, 2025, so next year. And if we scroll down, just get a better idea of what was their cash. I think it was 173. Scroll down. I was mentioning this to Power Group private members before. Yeah, 173 million and change for cash at the end of the quarter as of September 30th, 2024. Here's your adjusted EBITDA. Where's the gross margin at? They didn't mention it at the beginning, so it must be bad. Or not bad, but it's probably a lot worse than it was last quarter, I would think. It's crazy, eh? Not very many people on the live stream. It's like people hate the MSOs. When I do live streams on True Leave or Green Thumb, like supposedly they're all the leading companies, but you don't get too many viewers tuning into these. If it's a Canopy or a Tilray or something like that, you got hundreds of people. But for whatever reason, not too many people interested in the US MSOs. But I'm sure that'll change eventually. But yeah, where's the margin at? Like normally, it's the first thing you see. So the fact that it's not listed at the top, they love to do that. If it's not great, they they bury it in. Let's just see. Margin. Is it not listed here? Let's see. Gross profit. 51.4%. Yeah, what was it last time? I can't recall. Investors. And we got about 7 minutes until the call starts. All right, scroll down here. Told third quarter 2020, same thing. Report second quarter, yeah, because it was right at the top of the last one. I was pretty sure anyway. 280 million. I could have swore it was like right there, but maybe that was True Leave. I think it was True Leave actually that I'm confusing it with. Yeah, 53.7%. Just gonna find it over here as well. Second. There's a bunch of earnings that came out after hours, earnings season in full effect. There it is. So Green Thumb. Let's see if they have it on here. And not only do we not have that many people tuning into the US MSO, we got people commenting Tilray and, and LPs. I love it. Yeah, here it is here. So way better highlight here from Globe Newswire. Yeah, so 174 million, as I mentioned, cash. Scroll down. I don't like the report. It's not very, I don't make things easy to find on this one. Yeah, it's like pretty basic. Some of these other names, the reports are so robust and plentiful. Yeah, they don't have it easily findable, but yeah, is what it is, I guess. See if there's anything else. Net income. Yeah, they didn't really give too much color, so yeah, glad we're gonna join the conference call. And this Ben guy, he's like almost, is he even the CEO? Like I never hear anything from the guy. Here he has some comments. In the third quarter, our team delivered impressive results, including 287 million in revenue, adjusted EBIT of 89 million, 31% of revenue, and 48 million in cash flow from operations. Importantly, the cash flow from operations is after paying 35 million in taxes in the quarter, said Green Thumb founder, chairman, and CEO Ben Kovler. This quarter, we achieved a major milestone of our company and MJ Industry broadly when we entered a 5-year, $150 million syndicated bank loan facility. Strengthens balance sheet. Yada, yada, yada. Yeah. Pretty light in terms of comments. But yeah, we'll see what they have to say on the conference call. Just going to pause that. Let's go. Tilray double down today after the drop the last 2 days. Fingers crossed. Nice. Yeah, I picked up... I almost doubled my Cureleaf holdings. I bought MSOX. We'll just take a look at the sector today. So IIPR was down after earnings. Same with Verano. AYR just continues to get absolutely destroyed in just a few days. 65% down. I'm not a big fan of AYR, to be honest. CEO stepped down. I don't see how they're really differentiating themselves. I hear absolutely nothing about their products. It's one thing that's always kind of fascinated me is you hear all these people talk about MSOs, but no one ever talks about their products. Imagine like Warren Buffett investing in McDonald's and never talking about how good their products were. It'd be a little odd. VFF, Planet 13, and Cresco leading the bull list today. MSOX had a nice move. So did TCNNF today. MSOX, I bought this twice yesterday, so my average is 92 cents. And we're sitting at 104 here after hours. High of the day was 106. So off of the low to the high there, it's up about 25% on my position. Like I said, I filled around 92 cents. So at one point I was up about 15% today. And I'm going to be holding it till we get back to around the daily EMAs and fill that gap. So I'm looking at about 100 to 100 or a little north of 100% return on this one. It was a smaller position, but I'll take 100% any day. And then look at GTBIF here on the daily time frame. We almost got back to the daily EMAs today. So this is an example of, if you're this far away from the EMAs, unless you think Green Thumb's going to go to zero and cease to exist, which I would say is almost a 0% chance, why not want to add? Look how far away we got from the EMAs. We were 25% away, and here we are. We almost got back to it. So we're 30% bounce in 2 days. Solid bounce. So with great volatility to the downside comes great opportunity to the upside. But volatility down is volatility up, right? The more volatility to the downside, the more opportunities there are. And the more opportunities there are, the more likelihood there are 80 to 90% pullback coming again. And there will be. Don't worry. Mark my words. But yeah, overall, GTBIF not looking too shabby. Could still see an EMA 12 and 26 bull cross over the next few months. More than likely going to be due to rescheduling and banking. I think that's very possible we see that. 1 minute, I'm going to shut up. Not looking too hot here, though. On the weekly, we're seeing a MACD bear cross in terms of our moving averages. Yeah, we're almost seeing the 50 and the 200 weekly, but at least a few months away before we see those. Probably at least 3 or 4 months, I would think. But golden cross shaping up over the next, call it 2 to 3 weeks by the looks of it, I would say. Let's see what we got. And we're still listening to hold music at the moment. So we're about to get started. Here we go. We got some people, some late bloomers coming in, joining the stream now. Like I said, I'm surprised at these MSOs. If I do a Canadian LP video, I get like hundreds of people, thousands of views. Do an MSO video, you're lucky to get a few hundred. And I thought they were the best. But yeah, global expansion in Florida expansion. Yeah, I think Green Thumb only operates in 14 states as well. So, the reason why their numbers are so good is because they only operate in like 14 states. And, like a Cureleaf, for example, it resembles like an LP because they operate in Canada. They bought Northern Green Canada. So they're an operator in Canada, and they also have operations internationally in Europe and Germany, et cetera, right? Poland. So, you got to think like no wonder Green Thumb's numbers are so good is because they only operate in 14 states. They haven't even got half the US, right? So they got a lot of work to do, a lot of CapEx, a lot of expansion, and that's going to cost a lot of money. And if you don't have a license, that costs a lot of money, or you got to buy a company, dip into your cash reserves, or tap the equity markets and dilute. There's going to be a lot of competition for these MSOs as well. And Florida Amendment 3 not passing definitely hurts. Probably going to be a lot of price compression. You schooled me. I never heard of MSOX. I knew MSOS, but thought for a sec you were talking about MSOS. I'll keep an eye on it. It's the same company. It's Advisor Shares. So we got some hold music. So yeah, it's the same thing. It's just a leverage ETF. So I just posted a video on it today. Go check it out. It's this one here, Bloodbath MSOX. So it's a leveraged ETF that uses derivatives and compounding on it and swaps and things like that. So you want to be careful because there's fees with ETFs. They don't double dip though. It tracks MSOS, but it's basically 2x. So when the MSOS is up 2%, MSOX should be up 4% in theory. But yeah, check out that video if you haven't seen it. It's definitely not for the faint of heart. You want to be experienced. All right. But yeah, it's the same company. And you got to think too that these ETFs, when you're buying them, they're charging you a fee, like a management fee, and then your broker also charges you a fee when you buy and sell the ETF. So it can be costly. Oh, here we go. I'm gonna mute myself and we'll get started.
Open up the call for your questions. To ask a question, analysts may press star.
You're welcome, Falcon. No problem.
On your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the key. And to withdraw your question, please press star, then 2. Please note this event is being recorded. I would now like to turn the conference over to Shay Capeless, Director of Communications at Green Thumb. Please go ahead.
Thank you, Betsy. Good afternoon and welcome to Green Thumb's third quarter 2024 earnings call. I'm here today with founder and CEO Ben Kovler, President Anthony Georgiadis, and our Chief Financial Officer Matt Faulkner. Today's discussion and responses to questions may include forward-looking statements which are subject to various risks and uncertainties that could cause our actual results to differ materially from these statements. These risks and uncertainties are detailed in the earnings press release issued today, along with the reports filed with the United States Securities and Exchange Commission and Canadian securities regulators, including the 2023 annual report filed on Form 10-K. This report, along with today's earnings release, can be found under the Investors section of our website. Green Thumb assumes no obligation to update or revise any forward-looking statements to reflect events or circumstances that may arise after the date of this call. Throughout the discussion, Green Thumb will refer to non-GAAP financial measures, including EBITDA and adjusted operating EBITDA. A reconciliation of non-GAAP financial measures to the most directly comparable GAAP measures is included in our earnings press release and SEC and SEDAR filings. Please note all financial information is provided in U.S. dollars unless otherwise indicated. Thanks, everyone. And now, here's Ben.
Thank you, Shay. Good afternoon, everyone, and thank you for joining our third quarter 2024 conference call. Now that the election is over, the good news for us is that Green Thumb is set up to win regardless of federal change. We've said that from the beginning, and we've built our business on that principle. We continue to execute as we have all along, staying focused on what we can control to grow our business, thinking in decades, not what may or may not happen over the next few years. Moving on to the business at hand, for the third quarter, our team delivered impressive results, including $287 million in revenue, adjusted EBITDA of $89 million, and $48 million in cash flow from operations after paying $35 million in taxes. Our focus on cash flow and disciplined capital allocation has played a critical role in building trust and strong relationships in the banking community. As a result, in early September, we entered into a $150 million syndicated bank loan, a first of its kind financing in the cannabis industry. It was an oversubscribed, non-brokered deal at an industry-leading rate of SOFR plus 5%, which, after today's 25 basis point interest rate cut, is about 9.5% cash interest. With the proceeds, we retired the $225 million in senior secured debt that was due in April 2025. The notes from this new financing don't mature until September 2029. So in one action, we delevered our balance sheet, maintained our cash interest expense, and added valuable duration, another 5 years to execute on our growth plan. Capital allocation has always been our North Star, and by now you know we're longtime fans of Warren Buffett and take his wisdom to heart. One of our favorite quotes is, quote, "What is smart at one price is dumb at another." We think about that when putting precious capital to work in building our business. Price matters. It starts with our team having conviction that every dollar we spend can produce a tangible return and help scale our business. Our strategy has been to invest in cultivation and manufacturing as we launch retail stores. In the quarter, we opened 4 new dispensaries for a total of 98 locations nationwide. New RISE locations include East Syracuse, New York, 2 RISE dispensaries in Tallahassee, and 1 in Jacksonville, Florida. Just this morning, we announced our 99th store will be opening in Orlando, Florida on Good Homes Road. It's unfortunate that adult use did not pass on Tuesday. We believe our footprint in Florida is right-sized to its medical market, so the failed referendum on adult use is somewhat neutral to our business plan. That said, while frustrated we didn't hit the 60%, we continue to feel good about our opportunity in the state. Anthony will go into more detail on our CapEx plan and our exciting consumer packaged goods initiatives. On a high level, we are intensely focused on building brand equity from our portfolio of outstanding products. I'm sure most of you know the world-famous Magnolia Bakery that has been a treasured New York institution for nearly 30 years with its beloved banana puddings, cakes, brownies, and cupcakes. Our initial collaboration with this iconic bakery in 2023 was a huge success, so both Magnolia and Green Thumb were thrilled to expand our partnership this October. This collaboration is just one example of how our brands are making a big splash in new and innovative ways, and how we expand access to our products through various distribution channels. It is a new world today, one where you can purchase Incredibles in person at RISE dispensaries, online at incredibleshemp.shop, and even convenient same-day delivery, often within 1 hour through DoorDash. It's becoming easier than ever to access Green Thumb products for well-being, and this is just the beginning. We are excited by all the opportunity for our brands to reach even more consumers across the country. Accelerating that brand awareness continues to be one of our top priorities as we look to 2025. Rhythm, our highly acclaimed lifestyle brand and new partner to Barstool. Dogwalkers, America's favorite pre-roll brand. Our ever-expanding line of Incredibles, and Bebo for the sophisticated cannabis experience, our top-rated brands, building reputations as mainstays in the cannabis industry and the American experience. Anthony will touch on this topic a bit further, but net, we like the path we are on. Our strong balance sheet is the key to having options and the ability to execute. And to protect our strong balance sheet, we have to pay our taxes to avoid incurring a significant tax liability under 280E, a heavy burden to the industry. Before I close, I want to reiterate what I've said time and time again, that the future is bright for Green Thumb. We have a very productive asset base with a strong presence in many new and upcoming adult use markets. We love our balance sheet, especially with the recent debt refinancing, and we will continue to thoughtfully deploy capital into the business, explore unique investment opportunities, and remain open to strategic M&A. Most importantly, we have the best team in the business to ride the green wave. This team puts their head down and executes, focusing on the mission of bringing high-quality cannabis products to Americans who need them now more than ever. I think it's safe to say that so many gummies were consumed while awaiting Tuesday night's election results, and that consumption is not slowing down. Now, I'll turn the call over to Anthony.
Thank you, Ben. As you just heard, the team delivered yet another incredibly strong quarter, building upon our year-to-date achievements with impressive financial and operating results. Let's take a look at some of the highlights. First, in Ohio on August 6th, we launched adult use sales at our 5 retail stores at our Toledo cultivation production facility. Since the launch, our retail stores have seen an approximate 2x lift in sales, consistent with initial expectations. Even better, on the wholesale side of our business, we are extremely encouraged by our market share gains from our branded products portfolio. We remain optimistic that as more stores open and adult use regs are finalized, more and more Buckeyes will shop for their cannabis within their own state, giving the Ohio program the chance to reach the full potential of its 13 million population. Second, we opened 4 new stores during the quarter, 3 in Florida and 1 in New York. During the quarter, we invested $18 million in CapEx, spread equally across our wholesale and retail businesses. Year to date, our CapEx spend was around $55 million, and we expect to invest another $25 million in the fourth quarter, which would bring our total 2024 CapEx investment to approximately $80 million. For 2025, we expect CapEx to generally be in line with 2024 levels. Third, we continued our focus on getting our portfolio of brands in front of more Americans in unique ways. During the quarter, we hosted our second annual Miracle and Mundelein concert that allowed for open cannabis consumption for all attendees and also formalized our relationship with the folks over at Barstool to deliver customized content across several of its highly followed channels. In addition, last month we expanded our partnership with Magnolia Bakery by collaboratively launching the Incredibles Banana Pudding Bar and Red Velvet Bar in New York, as well as offering a Farm Bill compliant version for sale to customers 21 and older. These products are available in 25 states nationwide via IncredibleHemp.shop and DoorDash for home delivery in several markets. As cannabis continues to become more and more mainstream, we anticipate continuing to find creative ways to introduce our brands to American consumers. Fourth, we continue to drive strong CPG performance across our fleet and increased our net CPG revenue by over 15% compared to Q3 of last year. As the retail environment has become more competitive, we have continued to drive strong CPG performance by focusing on flower quality, launching new SKUs, and growing our share of products on third-party shelves. We are especially proud of the share gains that we have seen to date in Pennsylvania, Ohio, New York, and New Jersey. As we look ahead to the balance of 2024 and into next year, our team remains focused on the following. First, continuing to optimize our business within each market. In addition to focusing on the consumer and on operational execution, this comes down to identifying which markets we can continue to underwrite strong returns and allocating our capital and resources accordingly. Tuesday's election results will influence our decision-making on this front. Second, becoming more efficient in our retail and wholesale businesses to optimize margins in a deteriorating pricing environment. To help achieve this, we've leaned into specific technology investments and automation to achieve greater retail throughput and production efficiency. And last, continued investment into our team and technology infrastructure to allow for continued scalable growth. This includes the ways in which our retail customers shop with us, along with how we fulfill wholesale orders to ourselves and third-party accounts. As you'll hear shortly, we are comfortable continuing to increase our SG&A spend given the anticipated reduction in taxes associated with rescheduling. With that, we'll turn the call over to Matt to review our financial results.
Thanks, Anthony, and hello, everyone. In the third quarter, we delivered $287 million in revenue, a 4% increase year over year. Revenue during the quarter benefited from increased consumer packaged goods sales, along with revenue generated from 13 incremental retail stores and adult use sales in Maryland, Ohio, and New York. Pricing continued its downward slide with year-over-year and sequential declines in most markets. Retail revenue came in essentially flat at a 0.3% increase versus the prior year period. Third quarter comparable sales decreased 2.7% compared to the third quarter last year on a base of 82 stores. Consumer packaged goods gross revenue increased more than 10% versus the prior year quarter. Looking forward, we expect fourth quarter sequential revenue to be flat as price erosion continues. Gross profit for the third quarter was $148 million, or 51% of revenue, compared to $134 million, or 49% of revenue year over year. The increase in gross margin was primarily driven by operational leverage from the company's CPG business, along with lower costs associated with the purchase of retail inventory. Turning to OpEx, selling general and administrative expenses for the third quarter were $105 million, or 37% of revenue, compared to $85 million, or 31% of revenue last year. Total expenses increased primarily due to costs associated with ongoing claims and litigation, as well as compensation costs. SG&A excluding depreciation, amortization, one-time transaction costs, stock-based comp, which we refer to as normalized operating costs, approximated $69 million compared to $59 million in the third quarter of last year. The increase year over year is mainly attributed to the 13 incremental retail stores. We believe in the power of brand building and will continue to invest in our brands, which will increase SG&A in the coming quarters. This could in turn push adjusted EBITDA below our long-standing 30% target, which we're comfortable with, especially given the beneficial impact of income tax changes that will likely come in the near future. Q3 adjusted EBITDA, which includes non-cash stock-based compensation and other non-operating costs, was $89 million or 31% of revenue, as compared to $83 million or 30% of revenue for the third quarter last year, with the increase driven by margin improvement. Third quarter net income was $9 million or 4 cents per basic and diluted share during the quarter. This compares to net income of $11 million or 5 cents per basic and diluted share reported last year. After closing on a $150 million 5-year credit facility and retiring our existing $225 million senior secured note payable during the quarter, we ended the third quarter with cash of $174 million. Cash flow from operations for the 9 months came in at $152 million after paying $88 million in income taxes this year. In summary, we are very pleased with our team's continued execution. We will continue to drive long-term growth while maintaining disciplined capital allocation. We thank our team and our shareholders for the trust and confidence and look forward to updating you on our next call. With that, I'll open the call to your questions. Operator?
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. In the interest of time, we ask that you please limit yourself to 1 question. At this time, we will pause momentarily to assemble our roster. The first question today comes from Matt Bottomley with Canaccord Genuity. Please go ahead.
Good evening, everyone. Thanks for the time here. So I'm just wondering, when you look at the overall growth that you guys saw, just on the top line, so 2.4% or so, somewhat modest, I guess, as a number. But when you look at the overall macro dynamics in the sector, so what some of your peers have reported, it's a pretty significant outperformance in the environment that we're in. So I'm just wondering if we can get a little more granularity. How much of that is a bit step function in Ohio, considering that you guys started with 5 stores out of the gate? How much of that is more strategic in terms of maybe what markets you're deciding to accelerate in? Just trying to get an idea, as the overall market seems to be flat but down in the quarter, and it just seems like a notable outlier in what we've seen so far this period.
Yeah, thanks, Matt. It's Ben. Hey, I think you bring up a good point. Look, I think the core explanation there is the team and the drive. We think we're really up to something special. We really love the products and the brands that we're doing. We look out, we see Green Thumb up 4% year over year, the industry up 2%, and we view that as some modest market share gain. And obviously, we see what else is happening out there, and we feel those headwinds. The price compression is real. So to sell, the price is down 20%. You got to sell more units to equal the same revenue, which sometimes costs you more, particularly at retail. So the results are not one thing. Obviously, Ohio is nice. Maybe not as nice as everybody thought, but it's good. And certainly, there's a lot of people in Ohio. We think it'll continue to grow, especially as the operators optimize what's happening there. But there's not any one answer to that. I mean, it's a grind. And as you see out there, you see what's going on. This is hard work. And the team, somewhat makes it look easy because we keep putting up the right numbers, but it's not a single unlock. So we're proud of the 4 versus 2, which is kind of the language we speak, and we want to keep driving that.
Is there any market you can point to specifically that's better than your expectations? From the standpoint of where we were when we were chatting a quarter ago compared to what occurred in the quarter.
Yeah, so Matt, Anthony here. I'll take that question. Yeah, look, we've seen nice CPG gains. I talked about it in my prepared remarks, but we've seen nice share gains in a few markets. New Jersey, Ohio, Pennsylvania, New York, and that certainly kind of helped with the increase. And I talked also about the 15% kind of year-over-year kind of growth on a net basis on the wholesale side. And so, we're really leaning into those markets. We spent big kind of leading up to this year in a few of them, which kind of gave us really the biomass to go ahead and attack. And so we're doing that as we speak.
Okay, I'll leave it there. Thanks, all.
Thanks, Matt.
The next question comes from Aaron Gray with Alliance Global Partners. Please go ahead.
Hi, good evening, and thank you for the question. So wanted to stay online a little bit with, the wholesale trends, doing a nice job there. Wholesale mix, at least as you look at it net, has been increasing for you guys the past 4 quarters now. So, wanted to ask in terms of maybe, longer term targets that you're seeing now for wholesale versus retail, something that we used to speak a little bit more about a couple of years ago. And then as we think about the growth opportunities in wholesale, there's been some conversation about the broader competitive environment, struggles of certain operators potentially limiting some of the wholesale opportunities. So just how you're thinking about, credit to third party, wholesalers and how that could impact growth opportunities there. Thanks.
Yeah, thanks, Aaron. It's Ben. I can take that. I mean, what really drives the wholesale growth, obviously it's good products, good brands, it's good positioning, great team, but it's continuing to invest in the business and that CapEx. Combine that with a team that focuses on innovation and understanding where the ball is going and not where it's been, because trends change, whether it's the value consumer or the premium consumer or the bulk buy or the specials or how to handle holidays. And we've been at the game a while, so we can kind of crank it. But I think what drives the wholesale business and where we feel just very confident about are the dollars we put in over the last, 3 plus or minus years, 2 to 4 or 5 years, that is producing nice results into a business that we really like. And that makes it, a pretty good game to play as we go. I think the second part of your question was, good relationships with the trade. When people are out of money, they behave irrationally and, expect the unexpected in that kind of case. And that's not undocumented in any industry and anything. And obviously it's not fun when people don't pay you. So I don't know what else there's to say about that, but we managed to do a great job. Matt and his team keep it tight. But the good news for us is there's a high velocity on the product. And so without the product on the shelf, you start to think the retail store doesn't feel as good about their offering. And so we can leverage that with Rhythm Flower and other things that are happening in visits and celebrity and tie-ins with marketing in order to drive the collectibles.
Okay, great. Thanks. I'll jump back in the queue.
Thanks, Aaron.
The next question comes from Pablo Zuanic with Zuanic & Associates. Please go ahead.
Thank you. Ben, I'm going to ask 2 questions. But the first one, do you see potential or opportunities for what I would call a backdoor listing, right? In the past, you talked about Boston Beer. Recently, you had this transaction with Agrify that maybe you want to clarify, but that could be a possibility. I mean, is there room in the current regulatory environment, if at all, room for a backdoor listing to get you in NASDAQ, or that's just out of the question? And then the second question, I'll ask it right away. We can all debate the growth opportunities in the U.S., right? Especially now that Florida is not going ahead. But of course, you have Minnesota, PA, Virginia down the road. But, other companies perhaps, or maybe yourselves, could be looking at other businesses, right? Can you get bigger or enter hemp-infused derivatives in a big way? Can you start investing overseas, or that will make sense for you? If you can comment on those 2 questions. Thank you.
Sure. I guess I'll take it, Pablo. I don't even think I understand what you mean by a, quote, backdoor listing. So I'm not even sure. Over the years, there's been a lot of different kinds of conversations that have occurred, TSX and ring fence and other sorts of things that you know about. We're opportunistic investors, at the core. And we get paid for capital allocation and how those returns manifest. So in the second part of your question is essentially what's in your playbook? And the answer is we really don't like to share what's in the playbook. What I can tell you is that we are very focused on how we allocate capital and what that's going to produce for investors. So obviously we see what's happening in Europe. We see what's happening with input products. We understand the cannabis compounds in-depthly, and we can think as the consumer. And we talked about it before. The empathy with the consumer is the time machine forward to understand what's going to happen in this industry. And that's just really how we're investing and where we're playing. So we think it's an exciting time. Obviously, it's a tricky time, with the industry taking a major step back in terms of valuations this week. But, there's really no change around here. It's head down and execute the whole time. We like where the business is, and we think, whether it's in the short, medium, or long term, the market rewards the heaviest weight. We don't really care about the short-term voting. We want to take advantage of that, as simply as sell high and buy low, which is really what we're doing, and we want to continue to execute. In terms of where we're at, I think 30 billion, 31 billion in run rates, record highs the last quarter across the U.S. We have a lot of confidence that has at least a double in it, at least. And so really, we love where we're at. We love the consumer. We think the U.S. is in a very good spot. And obviously, the federal government has its own issues, which we can hit at another time.
All right. Got it. Thank you. Thank you.
Thanks, Pablo.
Again, if you would like to ask a question, please press star, then 1. The next question comes from Mike Reagan with Excelsior Equities. Please go ahead.
Hey, thanks for taking the question. Quick question on when you talked about the EBITDA guidance, and I apologize about the airport, so you can hear them announcing my gate. But in terms of sort of taking it down and noting that 280E taxes will hopefully go away soon, I guess, how do you typically think about sort of the reinvestment of those 280E taxes, which they're roughly 11% of revenue for most operators? How do you think about if that goes away, hopefully next year, how those taxes will be reallocated? Thanks.
Yeah, thanks. No problem. We heard you about the 280E tax, how to reallocate the cash. I don't think we think about it exactly like that. I think we think, what's the best use of our capital? What's the capital going to be? And so what Matt says, we have, patience, or we're okay with a smaller EBITDA margin as we have confidence that tax relief is going to come. So we're always just thinking about net free cash flow. And we think now there's an amazing opportunity to invest in these brands. We've talked about it. We think Find Your Rhythm is real. We know dog walkers are real. Vivo, Incredibles. And so we want to put our money where our mouth is and invest behind them, especially on the heels or the cusp of potential tax regime change. So that's really how we look at it versus what to do with this extra dollars. It's sort of, are we confident? Then how would we go deploy against the mission?
Yeah, and then the second question is, in terms of how you allocate capital, clearly, historically, you've been very thoughtful and pretty effective at it. I guess in terms of Agrify, you were interested in some of their technology. Is that more the precision and cascade extraction business, or more the grow pods? I mean, you seem to be pretty good at growing cannabis without their technology at this point, or is it just sort of using that equity as a shell for something else, other new technologies or other businesses that are not plant touching? Thanks.
Sure, thanks. I can take it again. Ben. Let's see, we really don't comment, like I said, to Pablo, but I can give you, a hint. I think you're right. If the fork in the road is extraction or cultivation, we like the extraction business with Precision. Has done a great job. We understand its position in the market. It's a great team out there, and we respect what they've built. And we want to be opportunistic about what is possible. Every day the world is changing, and it's a bummer to get left behind in whatever ways you want to think about the analogy. But we don't want that to be us. So we played the game with a lot of optionality. We talked about opportunistic investing. We've used the buyback. We've used banks. We've used offerings. And I would continue to think about us as being strategic in our capital allocation, and nothing is different here. And we know, for lack of a better way to say it, the dab game is real. The high-end dabs is a real segment in this market that has pricing power among a very, very loyal consumer base. And so as you think about scaling that business and what you would do, it might make sense to be a little smarter or closer to various pieces of it.
Yeah, great. Thanks a lot.
Sure.
The next question comes from Howard Penny with Hedgeye. Please go ahead.
Thanks for the question. Ben, you mentioned it's still day one. As you enter the second decade as a company, what specific aspects of the cannabis industry make you believe that it's still early stages, and how does that impact your investment and operational decisions in 2025?
Yeah, it's a great question. Thanks, Howard. I mean, so many things. One, nobody's really heard of Rhythm. It sucks, but it's true. So it's day one to figure out how to get that to change. The opportunity to buy Incredibles, like I talked about in the prepared remarks, has totally changed within the last number of days, not months. and that changes things. And quite frankly, still walking down the street in any city, a half an hour before closing at last call is ugly and unpleasant, and we think the future is different. So we see headwinds into alcohol of a material nature, and we see a $30 billion industry where we have one and change, so call it 3 to 4% of total space if you mark up the wholesale to retail, which no industry of that size is that fragmented. We understand the regulatory landscape, and we're ready to play offense because we spent $500 million of CapEx over the last X years, and it doesn't look the same going forward. So every time it doesn't look the same, it's like, new day. What do we do today? So we're big into the whiteboard, seeing white paper a problem and figure out a solution. And now we've got a lot of capital to play offense. We have a great business producing cash. We have an amazing team. And so we're just excited in the morning. We use that day one Bezos style around here to kind of fire ourselves up. And, that's what that means.
Thanks.
Sure.
This concludes our question and answer session. I would like to turn the call back over for closing remarks.
Sure. Thanks, everybody, for joining. Have a happy, healthy holiday, a little extra compassion, as we go through everything that's happening over the next few months, and we'll talk to you in about 90 days. Thank you.
All right, all done. It's a little bit shorter than expected as well. A lot of questions about, kind of the similar things that people are doing in the industry, kind of their peers and competitors. And they basically just said that we're not really interested in international or expanding too quickly. And yeah, they said they got a lot of work to do in the US. Kind of bounced around most of the questions I noticed, but overall wasn't bad. I like the company. I own the company. I think that, they got a lot of work ahead of them, and there's still a lot of uncertainty here, just kind of like where they're going to go. And I haven't heard anything about their products. If anybody has tried their products, let me know. I heard maybe a couple people talk about it before, but, for somebody who covers the MJ space, really every day for the last 4 or 5 years, I've never heard anything about their products. So if anybody's tried them, same thing with Cresco, Truly, I hear a lot about the company, how great the companies are, but I've just never heard of the quality of their products. They talk about how good their products are all the time on the conference calls, but I've never heard anybody say oh, Truly's got the bomb diggity, or I've never heard of it. You got to try this or whatever. Yeah, just curious to see, because if I ever go on a trip soon, probably won't be going to the U.S. anytime soon, to be completely honest with you, until kind of everything dies down in the political front, and then also the exchange rate is just absolutely terrible in Canada right now. But yeah, crazy times. I can't believe the average price of an ounce in the U.S. is $300 US. That is insane. Oh man, how much is that even in Canadian? Oops, too many X's. I go to xe.com. $300 US right now is $415 Canadian. You imagine spending $415 on 1 ounce, and it was just okay stuff, and 26% tell you to fly a kite. You can get, so let's just flip that around. In Canada, you can get a decent ounce, quad A stuff, for 120. It's nuts. So that would be $86 US. And it's 30%. It's crazy. Alaska prices are crazy, really? Yeah, that's not going to be sustainable. I question, there's a lot of questions I have with the US MSOs. They say numbers never lie, but there's more to the story than that. They're only operating in 14 states. They're getting great margins and whatnot, but who in their right mind is going to pay $410 Canadian for an ounce on average? That's insane. You can even get ounces in Canada now for $60. So that would be $43 US. And it's 18, 20% THC. It's not great. It's probably like double A, it's not quad A or anything like that. But yeah, you can get quad A for 30%, 32% for like 120, 140 Canadian, but a decent ounce for like $40 US. So, and eventually these LPs are going to be going to the US, right? Like Canopy's already in the middle of it. So I'm just a little concerned. I'll have to join their call one of these times and just ask them if they're worried about the Canadian LPs coming down and stealing their lunch, basically. Because I would be if I were them. That's for sure. And not just that, just like the amount of competition from their own backyard, right? It's the biggest economy in the world, the most competitive market, and eventually you're going to have international and Canada selling. It's going to be treated just like alcohol, in my opinion. It's cheaper here in Portland. Yeah, I can't wait to go to Portland. I hear that all the time. I actually met a guy at a Bitcoin conference a couple of years ago, and he was from Oregon. Excuse me. And I did this crazy weed with him, and yeah, he talked about how cheap it was and it's saturated. Yeah, it's just like California, right? So you got to think like this is eventually all going to happen to the rest of the US as well. And then just imagine once the big LPs come in, once, international comes in, because like I said, I think it's going to be treated just like alcohol. Be open borders eventually. It's just going to take some time, but yeah, now that Florida Amendment 3's like basically done for a while, maybe we see kind of rescheduling and maybe descheduling at the federal level over the next few years as well. But at the end of the day, there's going to be a lot of these companies that are struggling and they're going to consolidate. There's going to be a lot of consolidation from the smaller players into, a select few big companies, right? And then eventually there's going to be the blue chip phase when, you get the mega mergers from the Canadian LPs. You're talking like the tier ones merging with all the tier ones, right? For sure. Thanks, Harry. All right. Well, good hanging out with everybody, going in it there. And we'll catch you on the next one. It's board meeting time for me. I'm on the board of my condo, so I got to go do a board meeting. Go hang out with the fam for a bit before I do that. All right. Have a good night, everybody. It's Rod with the Power Group. Thanks again for joining us in the Pursuit of Wealth, and we'll catch you on the next one.